Welcome to ShortView Trading. This is your morning market hit for Friday, 17th of April. What matters today for traders? As always in relief rallies, the market pushes beyond the bounds of normal expectations. And we saw more of that last night with the S&P 500 pushing up after hours on the back of the news from Gilead Sciences, way more positive news on their treatment. But as I say, this is a classic relief rally. The shorts get squeezed hard, it lasts longer than people expect, and people's bearishness in the panic phase turns to optimism. But the wave 3 demoralization sell-off almost always happens. Indeed, over the last 50 years, whenever there's been a sharp sell-off in the S&P 500 in a bull market, in 13 of the 15 incidences we find there's a retest of the lows, or even a new low if it's a bear market. So don't be discouraged by the change in the narrative in the market and the more positive sentiment. That's exactly what does happen as a relief rally starts to become overextended. Now, what else is interesting about this relief rally is the S&P equal weighted index, where all stocks are equally weighted rather than market cap weighted as they are in the headline index. That equal weighted index continues to underperform the headline index. It underperformed dramatically on the way down as the sell-off happened through to March 23rd, as you can see in the chart in front of you now, with the headline index outperforming the equal weighted, and it's continued to underperform, albeit modestly, since that time. Now, in normal resumptions of bull markets, what went down the most in the sell-off bounces the most in the first couple of months. This is clearly not happening in this instance. That is a sign that this is just a relief rally and not a new bull market as of yet. It's also a sign that reinforces the idea that we're going to get a wave 3 demoralization wave. The breadth of the bounce is not as broad as you would expect. A number of other signs are also not confirming that this is a renewed bull rally and it is just a wave 2 relief rally. Those signs include the strengthening of the yen in recent trading sessions. They include renewed weakness in bond yields in the US into the close yesterday. And also, as we've been showing in the last couple of days, high beta indices are underperforming the S&P 500. So if you look at the Russell 2000, the S&P 400 or 600, that's the US small and mid caps, they're all outperforming the S&P 500 in these last few days. That means higher risk indices are underperforming the lower risk S&P. That is not a positive sign for the rally. Added to that, we still see stress building in Europe. Yesterday, Portuguese spreads over German widened, Spanish also a little bit, and of course Italian remain elevated. The European problems are not resolved as of yet and remain therefore a pressure point in markets and a potential cause of volatility. Over and above that, our models retain their short-term sell or rolling over from sell position, whether it's the technical scoring system which has been on sell, or the risk appetite models which are rolling over from sell, or the lack of downside put protection in portfolios. Portfolios are vulnerable here. Stress is building in parts of the system. The advance has been narrowing. This is a classic relief rally and it's pushing the shorts and squeezing them hard. To see how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? All the usual stuff. Any more policy announcements from any of the major policymakers across the globe, whether fiscal or monetary. Price action, of course. Further signs of financial stress or financial easing, or easing of that financial stress. And over and above that, in terms of key macro, out of the States, we've got the US Conference Board leading index for March and some further earnings announcements to do with Q1 earnings seasons in the US. Having said that, none of that's too significant. And of course, anything on health is always, as always, important. So that's it from us. That's your morning market hit for Friday, April the 17th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and or Twitter. Thank you very much. Stay safe.